Weiss Bachmann, Andrea Kovatariou, and Colby Connolly. Good morning. Colby, Head of Mideast Content at Energy Intelligence. Welcome. And let's start with you, please. I wanted to get your take on sort of a bit of where the market is trending. I mean, we've got a Brent now almost touching $70, which would seem a very healthy bullish price compared to recent months. And we've got a headline: oil prices rise on concerns about US-Iran tensions. I mean, US-Iran tensions are nothing new. So how is the market meant to interpret these headlines, this year? Obviously, we've had last year and that geopolitical risk supporting that. Why are prices continuing to react to that?
Yeah, I think we're still in a sort of a will they, won't they phase in terms of how diplomacy plays out between the US and Iran. I mean, the first round of talks in Oman the other week really had, I think, very low expectations attached to them. The best case scenario, I think, was really that Washington and Tehran would agree to keep talking, which they did. And as things go forward, I think it will continue to keep the market on edge as things will feel tense here in the Gulf, particularly with the U.S. Military buildup ongoing. It certainly doesn't seem like Benjamin Netanyahu's visit to Washington has derailed the prospect for more diplomacy. Details are kind of shady on exactly what happened during the visit, but so far, I think it'll be tense as things go forward again because expectations are so low, and because the talk coming out of the White House seems to be that the alternative to diplomacy is a military option. I'm not totally sure that I'm convinced that those are the only two things that can happen from here on out. But until there are, I think, clearer outcomes than one of the two, then we'll continue to see the risk premium in Brent that we've seen for a few weeks now.
Yeah. Okay, Michelle, Senior Maritime Intelligence Analyst at Windward. Welcome. I mean, on that point of sort of geopolitical risk, we had a survey to our audience earlier this week about what's going to be really supporting the market most, and that Strait of Hormuz disruption potential is still up there in the top. Although last year, obviously, give us your take now on where tanker rates are in response to those things, perhaps, and also whether you see an increased perceived risk on the water. Again, compared to last year when we had the same elements and questions for the market.
Sure. Well, geopolitical risk and volatility is always good for the tanker markets. And at the moment, they are very, very strong. And it's not just geopolitical risk, it's a lot of other factors as well. So we've got very large crude carrier rates, over $100,000 per day on most long haul routes. The Suezmax rates there, 1 million barrel carrying Black Sea, over 100,000. Aframaxes are on fire. That's both clean and dirty. Some of that is because of what's happening in Venezuela. Aframaxes are obviously the preferred tonnage that's used there. You've got ice class conditions in the Baltic. That once again has an impact on rates there. The recalibration of oil trades because of the pressure from the US on India. And yeah, where do I stop really? The EU sanctions on imports of refined products from Russia-derived crude, that's also having an impact on the market. So, I've come from visiting some ship owners, tanker owners in the last couple of days, and they all see this as very, very positive for their rates and for ships into the near future. Remembering, of course, as I always say, we're only one social media post away from having everything twist and turn around rapidly.
Andrea Kovatariou, welcome, first of all, to the show for the first time. It's great to have you, non-resident senior fellow at the Global Energy Center, Atlantic Council. Thanks so much for joining us. I mean, Michelle was mentioning there all the different factors and including Russian oil and the sanctions sort of stress that's coming on that. We're seeing China, for example, take more, India take less. Can you give us your take on whether you think the Russian oil flows will significantly change this year? I mean, first of all, they've swapped a lot of the Indian destination for China because of sanctions. pressure and because of tariff negotiations. Do you see that trend continuing? Do you identify any other changes to what we saw
Thank you for
last
having
year?
me. Good morning. I think it depends. We are 4 years into the, let's say, war and the tensions in between the European Union and Russia, obviously, and Ukraine and Russia. And we are at 20 packages, sanction packages, into the sanctions that the EU has imposed to Russia. So we are seeing, let's say, some impacts on that, and for that reason, we are seeing these flows going in various places. Russian crude trying to find its markets, and I think let's say, the crisis or the potential crisis or a potential disruption of the Strait of Hormuz would actually help the deals in between China and Russia, because obviously the pipelines are the solutions for Russian crude to reach China in that particular scenario. But of course, to your point and to your question, I think the sanctions and the continuous sanctions that the EU is trying to impose, both on gas and oil, is putting pressure on the Russian crude sector. Let's remember, gas was always about geopolitics. Oil is about money for Russia and for Kremlin. So in that regard, I think the sanctions that the EU has imposed, as well as the US, is putting additional pressure, and we are already seeing the results of that. Now, the sanctions and let's say, the operational impact of that, or actually the implementation of that, the checking of whether or not the sanctions are actually implemented, that's a different story. And of course, we are seeing delayed, let's say, effects of previous sanctions. Hopefully, that will change in the next year, let's say. But I think it's putting already pressure on Russian crude.
Yeah. I mean, Colby, just back to you on that, on sort of the sanctioned barrels. I mean, Russian crude now, as I just mentioned, a lot more of it, let's say, going into China. I mean, it seems like China's the savior now for Russia, really, because India's backed off a little bit, as we said, because of the tariffs, at least for the time being. And China has optionality now. That's the new big buzzword in the energy markets, optionality. China is expanding its optionality as we speak. How vulnerable does that make Russia, do you think, and geopolitically, does it have any significance?
Yeah, I mean, I think overexposure to any one buyer is always a significant risk, and I mean, I think the Chinese capacity to absorb all these barrels has been such a big question in how 2026 was going to go anyway, in terms of looming oversupply. We've used that phrase, who knows how many times now coming into
storage.
the
I mean, the storage was the big buzzword, wasn't it?
Yeah, that's exactly the next point I was going to come to, is that Chinese storage is such a black box. I mean, there's probably, maybe a couple dozen people in the world that know exactly how much of that they can really absorb. And so I think it'll leave an open question as to, how vulnerable it could make Russia. But I would hardly say that it's an improvement in the situation, given that, I don't think anyone should assume that Chinese storage is just going to be something that continues to infinitely absorb sanctioned barrels or new barrels of any type, for that matter. It's finite, like anything. And, the only question is just how much it can hold.
Yeah, I mean, I suppose China will continue to be the determinant of the balance element for the rest of the year, but clearly the market watching things there. Michelle, let's talk a bit about, we talked about sort of hot tanker rates continuing to be elevated. Obviously, part of that is influenced by the dark fleet sort of dynamics as well. And I know you've been quite outspoken in the past about where that's going. The monitoring of dark fleets doesn't seem to be improving. We've got the risks associated with that, and the ports who may or may not be participating, insurance rates. Does that part of the industry that is insuring tankers feel any more comfortable this year, or any more stable in terms of predicting what it needs to be doing?
Well, I think the really interesting thing to see here is that the dark fleet business model has been broken in Venezuela. So very, very quickly, since the capture of Maduro and the control of PDVSA by the US government, you have completely displaced, I estimate about 100 tankers at least that are now unemployed. And we now see oil very quickly transferred to the US, like 600,000 barrels per day. I think the energy secretary was in Venezuela. He pointed to cargoes now going to China and to Israel, again, on legitimate tonnage. So there is definitely some stress in the market. Most of those tankers, I think, will likely go into Iranian trading because they're very large crude carriers. They can't trade in Russia. And then again, you have the 20th sanctions package, which is going to effectively remove the oil price cap, which will see more tankers are going to have to be carried on the dark fleet, assuming that there is a market for them as the Russia becomes under more stress. So, you know, the dark fleet is in flux at the moment. The attacks on the falsely flagged tankers that we've seen, I think we're up to 8 seizures. It's highly disrupted.
Okay. Andre, let's talk a bit about back to Europe and talk about gas. We're in the middle of a cold winter, and storage levels are sort of being challenged, aren't they? They're sort of at the lowest point for 2 or 3 years. In the context of that, what does that tell Europe for its energy security just in the year ahead in terms of replenishing that gas? I'd like to also for you to touch on the Russian gas element of whether Europe's really serious about stopping all of that next year.
I think you're right. The storage levels are at, let's say, historic low in the sense that the last time we had this level at this time of the year was in 2022, just before actually the start of the aggression in Ukraine. So we are now at 38% storage levels, which is, I mean, considering the winter is you can find reasons for that. But that will make the replenishment process this year a bit more challenging. Obviously, less challenging than it was 4 years ago or 3 years ago. EU is finding options to that through its LNG deals with the US, with the Gulf, of course. So it's a bit less of a pressure from a financial point of view, but nevertheless, it is a pressure having this low level of storage, gas storage. But I think there are other issues that EU is looking when it comes to gas. Of course, it wants to phase out completely Russian gas by the end of 2026. It has managed to actually decrease the level from 45% 4 years ago to less than 20%. Of course, there is the LNG conversation that it's still quite an important element to consider for the EU. But I think there are other elements that ought to be considered. If we are, for instance, seeing a conflict or more tensions escalating between Iran and the US, we might actually see gas flows from Iran to Turkey being seized. So for that reason, then Turkey may go on the spot markets or on LNG spot markets, which will elevate the prices globally, which implicitly will pose additional challenges for the EU. And then another element that I think not that many people look at is that the snow coverage in Italy and Austria is quite low. It's below the historical levels. So that means that hydro potential for the spring and the summer will be low, which means that once again, it will put additional pressure on the gas for electricity production. So it's a bit of a complicated year, I would say, a bit of a perfect storm that is unfolding. But nevertheless, it's easier to manage that than it was 4 years ago.
Okay. Colby, let's talk a bit about GCC economies. I mean, they're probably quite happy that prices have got a bit more support from the sort of uncertainties there in the market. It's probably not a fundamental supply demand thing. It's got just that risk premium has probably risen. But should, from an OPEC plus leadership point of view also, what do you think that tells the group or the leadership in the group going forward in terms of strategy? Do you think they'll stick to what they're doing? Could they be tempted to add a bit more oil back?
Well, if they are tempted to add more oil, it's going to be on the basis of fundamentals and not the geopolitical premium. I mean, they've been pretty clear about that time and time again in the past. I mean, most high profile example of that, I think, would be back in 2022 when there was a price spike and there was pressure from the US and maybe from some other consumers to add more supply. And the response was very clear. We don't do this on the basis of a geopolitical issue. Had there been an actual supply disruption because, the supply wasn't really disrupted, the buyers just changed their habits, then that would have been a different conversation. And if there is a disruption as a result of geopolitical tension somewhere else, sure. then we'll have a discussion about where those incremental barrels might come from OPEC plus. But when they get together in March, I don't think the premium we see on Brent right now is going to be a driving factor in what their strategic outlook is.
And what about their outlook then for the fundamentals? I mean, OPEC's forecasts monthly are quite bullish, a bit, even though the IEA is becoming more bullish, OPEC is still ahead of that, right? We still see that divergence. Would you say that's justified? Would you say that's just, again, trying to sort of push the market in a direction of sentiment? What would you say to that?
Well, longer term, there's a cohesion question and a question about trying to maintain, OPEC plus overall market share. So, I think that'll really depend on how, how balances shape up by really the end of this month, because that's when decision time will be, and how severe a surplus really looks. And if demand is overperforming, then they could decide to go ahead with maybe a more cautious unwinding. Similar to what was done last year. I mean, bear in mind, not all of the barrels that they announced on paper actually materialized. There's issues with overproduction in some places, compensation cuts elsewhere. So, there's some math that has to shake out there that it will probably not be a part of a public discussion. But if they do see room for the market to absorb those barrels, then sure, I think they will. I think anybody will be concerned about what a rebalancing in price looks like if a geopolitical premium evaporates, and if we see a situation where Brent goes south of 60, then that would probably elicit a much more cautious response from the group. But we're not there yet.
No, we're not there yet, and most people were saying Brent's going to average 60 this year. Now, it's early days, obviously, but we've blipped up that average, above that average, quite a lot. Michelle, just back to tankers, but if we can just, I mean, Andre was talking about LNG and gas into Europe. If we can just talk a bit about whether you see that, not sanctions, but I mean the Russia gas situation. Obviously, that's already triggered a lot of LNG from America into Europe and onto Asia in certain instances. You've got the Qatar LNG competing with that into Asia. But from an LNG tanker rates, if you like, in that sense, LNG shipping, do you see any dynamics changing as we sort of progress into this year? And what would be influencing those dynamics, if anything?
Well, the LNG tanker market, which I'm not that familiar with, but I do keep a watch on the fundamentals. Actually, the spot rates for LNG tankers are very weak at the moment. And the reason they're weak is because there's an oversupply of LNG tankers. When it comes to specifically Russia LNG, a lot of that is done on contract. And so it's done on tankers that have been put under long-term contract for that transport. But there are a few issues bubbling around about sanctions on Russia, what that means for a lot of major oil companies that have spent, and literally it's 200 million plus to build one of these carriers. They're built for Arctic conditions. And now, of course, you had a Japanese ship owner who had 4 of these gas carriers that were sanctioned by the EU, and then the EU said, well, we'll remove the sanctions as long as they're not deployed in Russia. And I think there are a lot of other LNG carriers that have been built for Russian markets, and they were contracted, well before Russia invaded Ukraine. And there's some doubt as to whether or not they can continue trading in that market. So there's a lot of dynamics going on at the moment, and this is all being, I think, discussed as the 20th sanctions package, which is sort of ramping up its sanctions on that particular part of the energy sector. How this will play out for those European ship owners and market players that previously had positions in Russia.
Okay, Andre, back to Europe, and just let's talk a bit about the transition sort of element of the agenda there. I mean, Europe, again, in the context of the Russia-Ukraine Energy security, first of all, has become obviously front and center the last 2, 3 years, and so have defense budgets, for example, and a lot of money being diverted there. And the energy transition supposedly is going to suffer the budgets for that in Europe, that has been a leader on that front. And, but you've got then your legislation like Fit for 55 and EU fuel maritime, all sort of ongoing. So where is Europe's transition story slowing down? Does it have to because of these other geopolitical elements? Or do you see that commitment continuing? And cohesion is the big question mark, isn't it?
It is. And I think the short answer is yes and no at the same time. We have seen some advancements over the last 4 years, obviously pushed by the energy security conditions and by what is happening, especially on the gas side, and how the European Union and its members had to readjust or redesign some of their plans and strategies going forward to keep prices in check, because that was actually the alarming factor. And I think there was some advancements in that on that front. I mean, apart from the first year, the 2022, which was awful in terms of the financial losses, or let's say the how much the shielding consumption, yeah, exactly, the cost of that was. But at the same time, I think advancements have been made at a slower pace. Typically, that is what happens within the European Union. You need cohesion, and you need some sort of consensus to go forward with some of these big plans. I think they are still in place, some of them. I think the targets for some targets for 2030 are aspirational at best. So to your point on, some of those high-level objectives or numbers for 2050, I think, they're quite challenging to meet while keeping prices in check. But I think the advancements and the progress in that regard is in the right direction. Whether or not consensus is reached, and Michelle was discussing about the 20th package, we are already seeing some, let's say, some countries that are disagreeing with the full ban of Russian gas. So, there's still political, let's say, conversations within the EU members. And we are seeing the typical or the usual suspects that are somehow raising the same issues over and over again. So I think the direction is good. The pace is obviously not enough to actually advance the transition and keep the commitments for the climate agenda. But at the same time, I don't think Europe has that many options, considering, as you mentioned, the security, defense spendings or requirements, as well as the transition, the energy transition, let's say, process.
Okay, thanks, Andre. There's our question for today, which is on gas markets, sort of trends that could be influencing what direction those go in. Is it geopolitics, LNG oversupply? We just talked about spot oversupply, demand destruction, again, how our economy is doing, particularly in Asia, or regulatory shifts. So let's see where we go with that. Colby, we have a couple of headlines on our bulletin today about Libya and Syria, new oil blocks open for exploration potentially, and Chevron and European oil majors showing interest again in these very, dynamic parts of the world where companies have sort of taken a step back for obvious reasons. I mean, from what you study and what you read, would you say there is a new enthusiasm to go back into Syria and Libya, given that the vulnerabilities there, of course? That things could just flare up at any time?
Well, there's certainly, I think, an enthusiasm for the region overall. If you look at some of the big entries in the last couple of years, it's not limited to North Africa and the East Med. There's Iraq and some others as well. Kuwait may be looking like they're coming up with some new offerings now after the Kuwait oil and gas show last week. But yeah, on the Libya question, I think there's huge enthusiasm for the resources that are there because they're a known quantity. They are advantaged resources, advantaged barrels, as we'd like to call them at Energy Intelligence. Lower costs. Despite a lot of the internal political and security challenges that the country has, the enthusiasm is clearly there. I think the results of the bid round that were announced yesterday show that there is still certainly a good degree of apprehension about the state of affairs in Libya. There were some big awards and some big entries, but I think it was something like 15 of the 22 pieces of acreage that were on offer that actually did not receive any bids. So there was a lot of hype about the bid round itself, and again, certainly some big entries with Chevron, Eni, and Others, Qatar Energy among them, also is holding a working interest. And that'll be there. And I think maybe some of the more direct awards might be where more of the action is in Libya, because that was taking place before the bid round anyway, and that could continue. On Syria, what it seems like is that there are more smaller independents that are interested in potentially getting back into the game there, more so than the majors. There's still a lot to shake out in terms of the internal situation there, and I think maybe some of the smaller independents that have more of a risk tolerance. A lot of those that you've seen in the KRG in Iraq, for instance, are be some of the first that are
for oil and gas.
to get in the door when they can. Yeah.
Yeah. Michelle, I know you have to go, so we'll just take one more minute of your time. I want to I don't know if you can help us with this question, but the IMO, big picture sort of question, IMO and its directives for shipping, obviously for carbon emissions on shipping, they were due to vote this year, late last year on some new directives there. Can you update us on where that's going and whether that's having any, going to have any impact on the shipping sector, and are shippers abiding, let's say, and do you expect them to abide by these new directives?
Well, the regulatory certainty that I think the shipping industry needs in order to be able to continue with any decarbonisation plans has completely been thrown out. The IMO agreed to pause any decision on whether to place a carbon tax on for 12 months. And in the meantime, the usual suspects and countries within the EU, especially Greece, Cyprus, Malta, have been lobbying behind the scenes to further water down what was already voted and accepted. Clearly, the US played a huge role at the IMO last year to scupper any agreement. I don't like forecasting ahead, but I think I can pretty confidently say that they will continue to play that role, in the next 12 months. So I think everything is going to be placed on hold. I mean, this is like a decade plus of work to decarbonize shipping. It is potentially not going to be concluded until after the second Trump administration. That's my take.
Thank you so much, Michelle, for joining us today. Andre, let me go back to you. I want to talk a bit about, I know it's not necessarily your specialty, but just the whole nuclear story. We have a couple of headlines again. Japan continuing to restart some of its reactors slowly but surely, a lot to do there. But even from the European point of view, I mean, given this power demand, the AI demand, a lot of new private investment going into nuclear power supply, give us your sort of opinion on if you think that's going to be a big boom in the next 5 to 10 years.
Absolutely. I think it's undeniable. We are kind of seeing a renaissance when it comes to revival, as they call it, when it comes to nuclear power globally. And I think the EU has switched its, and when I say the EU, I mean Brussels, and the leadership in Brussels has switched their opinions on nuclear a couple of years ago. That was out of the question in terms of the technology supported one way or another by the EU. I think that has shifted, over the last 4 years, given the energy security conditions. And I think to that regard, I mean, obviously nuclear has always been and will always be, in my view, a state-led decision. So Brussels cannot impose and will never impose, let's say, targets related to nuclear, but it can support the nuclear power industry and, the uptake of that. And I think the main advantage that it poses, and one of the reasons why member states and countries globally are actually looking back into that, is the predictable aspect related to prices. Because what happened in 2022 in Europe, of course, was what was hurting Europe was the high prices, energy prices, but it was also the unpredictable nature of prices. No one knew where prices will go in 6 months or so, and so on. So to that regard, at least this is a huge advantage that the nuclear power poses. Once you have it in function, you have quite a predictable and steady price level for a number of years. So that's the reason why I think most European countries are looking into that, apart from obviously the base load characteristics of its output. That is also very important given the energy security, let's say, conditions in Europe. So I think there's increasing support both at EU level, Brussels level, as well as at some member states that had or have continued to have a nuclear power agenda in mind.
Okay. I mean, Colby, just maybe perhaps to end with you on that. I mean, back in the Middle East, we have energy security, of course, but you do have countries like the UAE and Saudi Arabia investing in nuclear now, again, diversifying, being maybe it's a cleaner, again, it's part of the sort of cleaner agenda. How serious do you think that is now that the general risks are lower for the industry because of historical experience? Do you think that's a serious agenda for Gulf countries who can afford to invest in that?
Yeah, it absolutely is, and power demand in the region is only going to continue to rise, whether it's due to the need for more air conditioning capacity, or some of the data center and AI ambitions that get talked about. We'll see how that materializes. I think everyone agrees that the trajectory is up. It's just to what extent. And there's been a lot of discussion about exactly how things would go with a Saudi civil nuclear program, given some of the concerns that the U.S. has about nuclear technology transfer in the past, whether or not the U.S. will be the partner. I think certainly when I was previously based in Washington, the signals I got were that was something that the Saudis did want, and I think they now understand that if they're going to get it from anyone, they can probably do that with this administration in one way or another. So I think they will move on that while they have an advantage there, or at least a perceived one. And I think you'll probably see it expand here in the UAE as well. It's kind of a no-brainer. So I think it is a very serious agenda item. I think we're only going to see more of it.
Okay, thanks so much to Colby Connolly and Andrei Kovatariu. Thanks for joining us, everyone, and have a good remainder of the week. All the best.
Thank you.
Thank you.
Thank you.